Here comes the analysis on the stock market. We're going to look at the intermediate analysis on the SPX, and then we're going to look at some short-term comparisons on the S&P 500, NASDAQ, and the Russell. Of course, we know we've got turmoil going on right now in the Mideast, and that has the markets extremely nervous. But still, the analysis is really holding up, and we're looking at a market that tried to rally and now is giving some of that back. And clearly, the market tried to move to the upside, but the momentum conditions are still very negative, and the patterns are still warning of trouble. And we have to be very concerned with that as we look at these charts. So this is the S&P 500 on the weekly chart. And we have shown for just months and months and months that we thought that this market would roll over in here in this period in August, September, and that September, October, potentially into early November was going to be a period of weakness. Now, the market decline is not very much, and it really, based on this low being way down here and what we call the configuration in this cycle, it points to another rally coming out over here in November, December. Now, what you can see in here is that the momentum is still negative. And this is our reversal scout, and that is a great way to not only understand the movement in the market cycles, but the conditions of the market. And you could see it tried to rally in here, but the rally that everybody's gotten so wildly bullish over that we're off to the races it really looks like it's not quite ready to do so. There is a potential, as we've said, for the market to pull back in here into this period into late October. So the low that we had right over here on the S&P 500 is about 42.18. Right now we're at 43.40. It's not that far, and there is a potential for it to get down here and test these lows or get lower. This area around 4100 is really the area that we had looked at as an extreme on the downside. And I can't rule that out because we are still in this period of risk. That's period of risk are those yellow ovals, which really show you when the market has risk of going down based on these cycle patterns in here. These yellow ovals in the bottom here are telling you that FEZ and FXI still have some risk out there into November, December, and that might keep the market from being able to get too far on the upside. So we're in this final stages of this period of risk right over here, with some likelihood that the market is going to continue to flail in here and have maybe one more capitulation in this time period out through the end of October. Now, let's look at some comparative charts. These are interesting charts because I have the S&P 500, the NASDAQ, and the Russell on the daily charts, and I'm looking at the comparisons in here on these charts and the momentum conditions short term based on the slim ribbon PO and based on our option bias indicator. And I'm going to blow each of these up so you'll be able to see what these look like. But clearly you can see the Russell is very weak. And we have talked about the pattern in the Russell, that cycle that you can see on the bottom. That's a cycle bracket, just giving you the average distances in the cycle rhythms, that it was also playing out on these other indexes. And I'll show you that as I blow this up. So let's look first at the Russell. And here's that Russell pattern. And what we've had in here now, the option bias indicator has been neutral. That's yellow, if you can see that in there. So there's not much showing there. But you can see here the slim ribbon PO right over here, which has been giving you these red signals. In other words, momentum negative and the downside resumption, which is telling you about the negative conditions. And look and see the Russell is getting close to coming down to that last low. This points to the low out somewhere around November 1st for the Russell. In other words, there can be a lot of downside pressure in here. Now, the Russell is often very reflective of two things. Number one, that it's filled with companies that lose money, and that it's very susceptible to the rates going up and it really hurting the potential for earnings in those companies. The other thing is there's a lot of financials in here, and when the financials are moving down, then that often affects this also on the downside. It failed here in resistance, as you can see, and the warning levels over here, it didn't really get near. So this is still leading on the downside and quite negative for the Russell. Again, this points to declines, and you can see our 3 different tracks that we have in here, with the likelihood of it at best case coming down here and testing those lows, with a potential for a move down to 1637 at that support level down there sometime around the end of October. Now I'm going to move to the NASDAQ, and you can see this green dash. That is the Russell I just showed you. But clearly the NASDAQ is much stronger. It got very close to that repair level right over there that we had listed. And if it would have gotten through there, it would have warned us that that intermediate bottom that we just looked at was in place, at least for the NASDAQ, and that if it came down, it might set up a positive pattern in here, or at worst, test the low. But right now, it avoided that getting through that repair level, as we call it, which was right around, let me just take a look here, right around 15,360, and that is still a very key level. Again, this is the period of risk over here continuing out into the late October to beginning November period. If it gets above that level at 13,360, it will warn us that there's a higher potential that the bottom is in place in the stock market. If it moves above this level right over here, which is that last cycle peak, 15,670, 15,600, I'm sorry, then that would warn us that the low is in place. It would be a much higher probability that the intermediate low is in place. Again, we're looking at neutral reading right over here. And you can see that what was happening is that this was giving us downside resumption warnings, but it was resisting that and then went neutral and then actually went short-term positive. So you could see that the NASDAQ is much stronger than the Russell looking at that. And as it moved very far away from this low, where the Russell is testing the low right now. So you have this disparity going on with the junk stocks that are in the Russell, much weaker than the tech-led stocks that are here in the NASDAQ. Again, watch those key levels up there because they will then warn us that something had changed in the market. We are always looking at that, at the highest probabilities and the information that is coming from the market because it speaks to us with all in this style of analysis, most certainly, and we're always watching for that. Highest probability is that there is a further decline over here. If it gets through the pair level or this key level here through that cycle peak, it will then warn us that that low is in place on the intermediate chart. Now we take a look here at the S&P 500. This looking similar to what we see here in the NASDAQ as it got up into the resistance level here, but quite a distance from what the repair level would have been, right around 44.70. So a big distance from that and failing in resistance here. Again, the probability is that this will bring more weakness out over here in towards this end of October period. And then we get into the November-December period where the market certainly has a higher probability of being better. Over 44.60, we get a 44.70, we get a warning that it has repaired itself, and then over this level right over here at 45.40, and then we know that that cycle bottom is in place. You see, confirms intermediate cycle bottom. We have those messages always in there for our members. I want you to note here that the option bias indicator has stayed negative. So this is weaker than the NASDAQ. And while the momentum here has neutralized, it is also weaker than the NASDAQ. So you have the NASDAQ, the strongest index, the S&P 500 the next, and then the Russell certainly much weaker than we have what we're looking at in here again. The weekly chart is so important to really focus on also in this period of likely one more move down and on those daily charts showing you the potential for that capitulation. So that is a look at the S&P 500 weekly, the comparative charts, short-term comparisons in the SPX, NDX, and RUT, and the key levels to watch for. Highest probability that there will be further move to the downside to test or surpass those lows on the downside, but then the market will tell us if it moves through those key levels as I just gave to you. That's always important to know. All the information, remember, we are agnostic analysts, and that means that we listen to what the market tells us. We have a very distinct method to our analysis, and if you want to learn that, please go check out our cycle analysis workshop on our website. There is a special coming for that not too long, just some weeks out there, and you're going to be able to learn this style of analysis because it will make a huge difference. And if you do, you'll never look at charts the same way.